Good evening, and welcome to Behind the Shadows. My name is Susan Finelli, and I am your host and author of Behind the Shadows, a program where we go behind the shadows of what meets the eye. This evening, we will be exploring understanding your credit, and this is a program where you may want to tape for future reference or to share with family and friends. Our guest tonight is Serge Bevil. Serge is a consumer advocate, credit expert, and CEO of VantagePoint Credit. Serge Bevil is a nationally respected credit expert. His company offers in-depth credit solutions, consultation, and coaching to consumers, entrepreneurs, and to professionals in the mortgage and real estate industries. His expert knowledge and proven experience with the credit scoring system, the procedural workings of the major credit bureaus, and the credit laws allows him to offer a results-specific approach to his clients' needs. He is also well known for his initiatives and advocacy for credit literacy and fairness. These efforts are most visible through Serge's educational credit seminars that help consumers understand the practice and procedures of today's credit environments. He also consults with many companies in various industries about the complexities within the credit reporting and credit scoring systems. Serge, welcome to Behind the Shadows.
Thank you for the accolades.
Oh, it's all you. I didn't make them up.
Thank you. Thank you. It's a pleasure to be here this evening.
Well, it's a pleasure for me to have you as a guest.
Thank you.
Just to let the audience know, we met. I was at one of your educational seminars.
That's right.
And I was so impressed with not only what you had to say, but your in-depth knowledge and understanding of what you said. A lot of times you go to a seminar and you know people are just kind of reading from a teleprompter, but you really understand, and the questions that were thrown out to you, you were right there on the money answering the questions. So I think this is going to be a very good show tonight for our audience.
Great.
Now, I know that you think it's important that the viewer come away with a clearer perspective of credit and how your credit can hurt them or help them. So why don't we talk a little bit about that?
Sure, absolutely. I think that one of the things right off the bat that people don't understand is the society that we live in. I mean, we live in a capitalistic society that is absolutely credit-driven. That is to say, short of getting a library card or getting a discount card at the supermarket, just about every application that you sign is credit-driven. That's the society we live in. It's not like Europe and other countries, which is cash and carry. So your credit is critical. Everything that you do is reflective of you. Right. And that's society, and people don't really understand the importance of how your credit should be. You should always have good credit rating. It should be accurate, and it really should be reflective of your true credit behavior.
Well, the misunderstanding probably is what helps people get into hot water about their credit.
Absolutely. It happens all the time.
And I think people don't understand the interest that goes along with credit. I mean, I remember my first credit card. I was 18, I think, when you were allowed to get a credit card many years ago. And to this day, I never forgot it because I was 18 and I was charging, and I think I had like $1,000, and to me that was a lot of money. And it probably took me a year to pay it off. And since then, if I buy something and I get a credit card, I pay it. And it's as if I'm going to pay cash, but I just kind of pay it at the end of the month. And I never let it go because that one lesson all those years ago taught me that this is a racket.
Well, it's not so much a racket as it is, people don't understand that the credit system to begin with was always created for creditors and not the consumer. It's just that over the years, as our economy has changed, and especially with the height of the mortgage industry, now credit became more prevalent and more people getting credit cards. Millions of credit cards. Credit became in the forefront, and as a result of that, consumers began to become more aware of it. They said, what is this issue? And then all of a sudden, because of the changing times in our economy, what had happened is that the creditors were getting hurt. The default rate on credit cards and mortgages began to hurt them. So the criteria changed. They stiffened up the criteria. And people said, how come I'm denied? Why? Because your credit isn't good enough. Well, what's wrong with my credit? And then all of a sudden, people became exposed to some of the reasons why their credit was beginning to become tarnished.
Well, let's talk a little bit about credit scores.
Sure.
I know that there are 3 different credit scores. So can we talk about how they get to a credit score why they're different, and then if I go for a mortgage, what credit score does my banker choose?
Sure. The three major credit bureaus in the United States are Experian, Equifax, and TransUnion. They're the huge corporations. And what they basically do is offer analytical information, marketing information, and of course, credit reports offered to businesses as well as to the consumer.
Right.
That's what they do. So as a result of that, they work with a scoring system that's basically the FICO scoring system. The FICO scoring system is licensed by Fair Isaac Company. And what that does is that it measures, the scoring system has a score, it measures your performance of your past habits, what you've done in the past, what your present activity is, and its purpose of that is to measure your prospective future activity.
Oh, interesting.
So all three bureaus now come up with their own score. Even though they're using the same FICO score, they're three separate companies. That's why their score will range differently. Also, another reason why the score changes is that not every creditor that reports your credit reports to all three bureaus. So there's some fluctuations there. And thirdly, of course, which is really important, when you're working with three different bureaus and the bankers or the credit card companies or any other creditor said, which one do we pick? We have three score, a high, a middle, and a low. Well, in their infinite wisdom, they say, let's go in the middle.
In the middle, yeah.
And that's how they do it.
And that's how they do it. I was always curious, about that. I say, well, if they have three, how do they arrive at three? And then, do they throw a dot at the number?
No, they can't say. Well, they can't put the merit on. The highest score represents that because you're great, you have a high score, and it's not fair to say that you have a low score that we're going to pin it on you because you have a low score.
Right.
So as a fair balance, they use the middle score.
I see. Now, I know that you say that it's important to identify your profile information.
Very, very important. One of the things that people don't realize is that the credit bureaus, they store they're like big data banks of information. That information comes to them from the different creditors, which pay in to report your information. So they consistently have this information coming to them at different times. So the accuracy of what they have is based on what is given to them, and of course, how well they input the information.
Right.
Although they're highly automated and are very good at it, errors do occur. Well, in fact, 70% of credit reports have errors.
Really?
So it behooves every individual to look at their credit to make sure that his reporting is very, very accurate. And it starts with your identity. That is your name, your date of birth, your social security number, and your address. The most important is your social security number and your name. And you should always check your credit report and make sure that it's correct and see if there's any aliases of that. Are there any variations of your name? And the best way to say, am I doing it properly? Go through your pocketbook or your wallet and take out your driver's license, your social security card, and make sure that the information is the same. Middle names and first names are not swapped or anything else.
Well, how does the consumer go about checking their information?
Well, the easiest way to do it is they can go online or go directly to any of the three credit bureaus, which are Experian, Equifax, or TransUnion, and they can order a consumer report right online. There's a fee for it, and you can get it with credit scores. I would advise the consumer, rather than getting three individual reports, one from each bureau, you can go to any one of the bureaus and order what's known as a tri-merge or a 3-in-1 report, where the report will have all three bureaus reporting at the same time. This way you can go from left to right and see that one account is what's the information that Experian is reporting on versus TransUnion versus Equifax. And if there's an error or something that's inaccurate, you've spotted it.
And what's the name of that again to tell our viewers?
The three major credit bureaus are Experian, TransUnion, and Equifax. Not necessarily in that order, but those are the three largest companies.
And the name of that, where you get the three...
well, that's a particular product that they sell. It's called a tri-merged report, otherwise known as a 3-in-1 report.
Okay.
And it gives you the benefit of looking at the scores and seeing if the information is consistent across the board. Because if it's not, first of all, it's going to affect your credit score, and secondly, misprofile you.
And any of those 3 credit companies can give you that report. You can order from.
Absolutely. It's a service, and they want to give it to you because they make money on it.
They make money on it.
Sure. It's a product that they sell.
Well, I have a question. Maybe 2 or 3 years ago, I got a notice from my bank saying, oops, we lost everybody's Social Security number, and, we're going to freeze you so people can't get your credit. So what I did is I signed up, I think it was Equifax. I forgot which one it was, because I wanted now to start watching my credit for a while. And the information was so stale that, I'd get information from them, and on your American Express card, X amount of dollars was spent 5 weeks ago. It's useless.
Right.
So what good are these companies because you know what, American Express called me the minute it happened and said, wait a minute, we have to stop your card because there's fraud on the card. But it took 3 to 5 weeks for it to come in on one of these corporations.
Well, what happens is that the credit bureaus are bound by certain laws. And the Federal Trade Commission says, listen, you have to do certain things to protect the consumer. And according to the Fair Credit Reporting Act, you have to report information as accurately as you possibly can. And one of those guidelines is that if there's any possible fraud, you have to advise the consumer and put a fraud alert and advise the other bureaus. And this is in the best interest of the consumer. There's a good and a bad of that. If there's actually something happening, the good part is that no one can pull up your credit, and it's going to prevent anyone from doing anything, meaning opening up other accounts or inquiring about your credit. The bad part is that, I shouldn't say bad, but to the degree it prevents anything else going on. So should that happen, obviously you want to investigate it, but you also want to, if it's not legitimate or not accurate, call the bureaus to remove it. Now, from a point of view of having a monthly service to look at your credit and monitor it, there are different services. Some are better, some are worse. What was better 6 months ago may not be good this 6 months.
Right.
So it's always good to check different services and the new products and how they offer it. Another consideration is that the credit bureaus report information based on how it's given to them. Some creditors will report that information every 2 weeks, every 30 days, and some will update every 45 to 60 days.
I see.
And that's at the discretion of the creditor, and they do that strictly for marketing reasons.
I see. So that's why it took so long for that to happen. Now, is it true that every time someone pulls your credit score, does that affect your credit score?
Well, the term is called permissible purpose. If you're going to a lender to secure a mortgage, or if you're going to secure a credit card, you're authorizing someone to pull up your credit, so they can review it and then make a credit decision to say, will we extend your credit or not? That means you've authorized them. That's a permissible purpose. Each time you do that, there's an inquiry, and that inquiry will affect your credit score approximately between 5 to 8 points or higher. The credit system is designed to accept credit pulls anywhere between 3, maybe 4 credit pulls in a 2-year interval. Generally in a 1-year interval. So when you have multiple credit pulls, it shows that you're looking around, and also you're continually losing points, 3 points, 5 points, 8 points.
Why do you lose points?
It's just the way the system was designed. There are different categories that affect your credit score. So the point to be made with that is that if someone's going to pull your credit, be sure that you are authorizing it and that you intend to purchase something. Don't let anyone pull up your credit just for the sake of looking at it. Yet, if you want to check your credit, you can go online and get a consumer report. That will not affect your credit score at all. So you can pull up your credit report anytime you want. It will not affect your score.
And you get it through one of those 3 companies, and you just ask for a consumer report?
That's right. But there's many other services that offer the same thing. There's third-party providers that offer credit reports. I always believe go to the main source.
Now, how safe is it to do that online?
If you go to the main sources, they're very safe. They're all consumer protected. I've had plenty of customers come to me and tell me that they pulled it, and I've instructed them to do it as well, and it's never been an issue. Okay.
Let's talk about the 5 major categories that drive a credit score.
Okay, now we start to get into what affects credit.
What affects credit? Yeah, because I know a lot of people, they're surprised. Why don't I have an 800 score? Why do I have a 650 or a 700?
Let's put it this way. The credit scoring system goes from 300 to 850. Most people are in that 550 to 750 range. if you have 800 or above, I call it walk-on-water credit.
Right.
Not many people have it. Sure, there are a number of people who have them, but it's hard to get that. There's a number of different components that make that happen. But to begin with, 35% of your credit is based on your credit history. That means, how have you performed in repaying your creditors, your credit cards, your mortgages, your installment loans? And over the years that you've been doing it, have you paid it perfectly? Or have you had 30 days, 60 days, or 90-day lates? Those tarnishes will cost you. In fact, as an example, if you have very good credit and you have one 30-day late on a credit card, maybe a month or two ago, you can expect to lose easily 80 points on your credit score. Even 100 points.
That's amazing. That's amazing.
Traumatic.
It is. It
Sure.
is. It's it's devastating to people. It can be devastating, especially in this economy where people are losing their jobs and working temporary or whatever, and they have a case of the shorts and they may not be able to pay as quickly.
I can't tell you how many people were applying for a mortgage and all of a sudden they someone forgot to pay a bill, a silly bill, a Kohl's department store bill,
Right.
For $50, and they had good credit, and the credit went down by 60, 70 points.
That's amazing.
And now they can't qualify for the mortgage.
Well, I remember the seminar I attended that you gave. You mentioned that even if you pay on time, but you pay close to the due date, it can affect your credit.
Absolutely. Each creditor, here's an example. If you look at your statement and the bill says it's due on the 27th, you have to understand the 27th in the eyes of the creditor is, it's in front of me and I put it in the system, I have the money in hand. That's my day. Anything before that doesn't count. So you have to say to yourself, if you're going to mail it, you should think of mailing it at least 10 days, allowing for Murphy's Law, and the fact that when it goes into the system, it could take a day or two before it actually gets in front of someone to actually input the information, and then for another day for the check to clear. Now, if it's due on the 27th, some companies will allow you to pay it that day, not many. So be wise to pay it even online or do a transfer. You should do it at least at the last minute, 2 days before. Because also what happens, banks transfer money from one to another. That could take a day.
Interesting, my goodness.
So pay ahead.
Audience, are you
Don't wait till the
listening
last
to this,
minute.
audience? This, I
Don't
think,
wait.
is the most important thing that Serge is telling us tonight.
Absolutely.
I think it is. I think it's one of the most important things that we're talking about tonight.
I have a client who came to me who opened up an account, and they're flabbergasted that they sent their check 9 days prior to the due date, and the fulfillment center is 4 towns over from where they live. And when they looked at their checking statement, the check was posted on the 10th day.
Oh, good. And that affected their credit. Let's talk a little bit about your clients. What do you do for your clients? Because credit to a lot of people is such a mystery.
It is very mysterious because people don't know anything about it. And the reason why, firstly, is that where do you find out about credit? It's not taught in the schools. It's not taught in the colleges. In fact, if you're an accountant or you're an attorney, if you look at their curriculum, you won't see a course on credit, even for an accountant.
Right.
Even though you can take a course as a credit analyst, specifically to Wall Street. So there's no real formal education or secondary education. There's a smattering here and there. So whatever the consumer knows is based on what they may have heard of, what research they may have done on the internet, and hopefully what they've seen is hopefully accurate to properly guide them. My experience, I've done a lot of business consulting, and it comes from, I have a banking background, and over the years, painstakingly, I've learned a credit system, which means, the credit system means I understand the FICO scoring system and the algorithms that make it work.
Right.
I understand the culture of how the credit bureaus work, and I understand the credit laws, and you have to understand all of these things. As well as the individual cultures of the creditors. And you have to combine all these things to understand how this system in the wash really works. Right. So what I present for my clients, and I am a credit advocate, I believe that consumers don't have the opportunity, were not well armed to be able to serve themselves in credit situations. So as an advocate, I believe in trying to help them understand them and how to solve their issues, no matter what they are, whether it's business related, on a personal level, they're trying to expand themselves, they got themselves in a difficult situation, hard times, any number of different things come. My clients are very diverse, from high net figure income individuals to your everyday working individual. They all have variations of the same credit issues. So what I bring to the table is the opportunity for them to understand what the issues are and be able to understand how to reprofile and improve their credit in such a way that they can get back on the path of where they choose to be. Things can always be improved.
How long does it usually take to get back on track?
It depends the severity, what the issues are. It could be as quickly as 30 days. It could be 90 days. It could be 180 days. I've had cases that have taken a year. I've had a client who is a very well-known real estate investor in the West Coast, who's had 43 properties, and because of the fallout of the real estate market, 39 properties went bad.
Especially on the West Coast.
Right.
Yeah,
so,
especially on the West Coast, yeah.
So I've helped him, and we've resolved a number of the different issues, very complicated with all the different lenders, but his profile is a lot better. His credit scores have gone up, and he's not too far away from getting back on his feet again. Now, that's a very extreme case.
I was just going to say that. That sounds like it's on one end of the page.
But I have people who are, women or men who have been victims of, bad divorces or bad business transactions, or just bad times.
And identity theft. Let's talk a little bit about that, because I know that's a nightmare. I had a client who had her Social Security card stolen, and it was a nightmare for her. It took years and years for her to clear herself.
Absolutely. Identity theft is one of the biggest things on the radar of the FBI. And the reason being is that now with computerization, it's become so sophisticated. The computer hackers, believe it or not, one of the simplest ways they can get into just getting onto your computer is going through the back end, like through your printer.
How does that work?
I'm not a computer expert, and I'm not going to walk into that. I can ask my son. He's a computer expert. But the interesting part about it is that in our day of sophistication in computers, there's a lot of people who know how to hack mainframes at companies and at individuals. And once they get your information, which is not difficult at all, these who hack credit on a very large scale, your information is instantly sold and parceled out, and they will look at your credit and say, let's say there's 100,000 or 50,000, and boom, and it's swiped and it's purchased and it's gone. It's very sophisticated. So the important thing to know is that if you feel that you're a victim of identity fraud, immediately put your foot on the brake, call the major credit bureaus and say, hey, I think I'm a victim. I want a fraud alert. That means no one can touch your credit without first contacting you. And they will post your phone number. Number two, find out who those sources are where the credit has been used. Someone opened up a Visa card, a Chase Visa card. Someone opened up a Gap card. Contact those companies and say, identify yourself and tell them you suspect that someone fraudulently opened up a card in your name, and as long as you advise them, they will send you paperwork to confirm this, and you fill out an affidavit. And if you do it properly within a short order, you'll be able to resolve your issue. I've advised plenty of my clients. And if you do it right, you can resolve identity fraud in 60 to 90 days.
Well, let me ask you this, because this happened over the holidays. I got a call from American Express. And they said, $1,000 was just put on your card at Toys R Us, and we know that you don't shop at Toys R Us. So they stopped the card and issued a new card. Is that a possibility of identity theft, or this people come up with numbers? Because we had the card in our hand, so it wasn't a lost card. So how do they get the numbers? I mean, is there a computer system that just randomly, puts numbers together and let's hope it works? And is that identity theft, or is that just plain out fraud?
The credit card companies are highly sophisticated, highly automated in what they do, and they have predictors set on your profile. Anything that sets anything out of the norm of your profile and your spending habits in the past calls that immediate attention. If they in your profile, if they go to a store that is beyond what they typically shop, let's set a limit, 500, 750. And once it passes that limit, they have to make a decision. They either contact you first or put a freeze. It's at their discretion what to do.
Right.
A good example, I was using a particular debit card, and as I was out of state and for 2 days, and I had done a lot of spending. And all of a sudden, the third day, I went to use the card, and I couldn't charge on the card. And I said, why not? And I called up my bank. Oh, well, you were out of state, and we saw a tremendous amount of expenses, and we couldn't reach you, so we decided to protect you and freeze your account. Well, from one perspective, it was great, but it was inconvenient at the same time. But if I had to weigh the odds,
options,
exactly,
the options. Well, it could have been embarrassing too if you had a client or something and you wanted to.
One of those things in life we deal with. That's right.
We have to, if it's going to help us.
The real reason at the end of the day is that a lot of the credit card companies have really taken a real beating over the years, and they cannot afford to take the losses anymore. So they're taking much stricter measures so that if they see something that they don't believe is accurate or is out of the norm, they have to take decisive action. Right. And that's what they're doing.
That's what they're doing. Yeah. Now, what about, because with all the credit fraud and people getting themselves into hot water with credit, every week of the year you get a free credit card in the mail. I mean, that's hurting them because then people are not going to pay it, and it's hurting the consumer. Should there be some sort of regulation about this, or oh my goodness, I hear I'm getting cute that we're running out of time already. My goodness, we have not scratched the surface. No. But
I will say one thing, that if you get too many credit card offers and you don't want them, it's very easy. You can call any one of the credit bureaus and choose to opt out. When you opt out, that tells the credit bureaus that now the creditors who subscribe to them can no longer send you free literature.
Well, that's good.
Solicitations.
So before we leave, I just want to tell the audience that I know you strongly believe in that today's a credit-driven society.
Absolutely, without
credit
a doubt.
Reporting and credit scores a major deciding factor in our financial future.
Absolutely. Without a doubt.
Without a doubt, and that individuals have to take responsibility.
That's right.
For themselves.
Right. It's in their best interest
to do so. I want to thank you so much for sharing your expertise tonight. I wish we had much more time. I want to make a special thanks to our audience for tuning in tonight. And if you've missed any of our programs, you can go on my website at www.behindtheshadows.com and click on Public Access Television. If there's a topic you would like us to speak about, you can contact me at Susan@behindtheshadows.com. And until next time, remember, the brightest light shines behind the shadows. Thank you so much.
It's my pleasure. It was great.
Did it fly? And the time just flew by.
It did, actually, just like you said it did.
It just